Today, we're diving into a significant event in the Bitcoin world. Recently, Bitcoin's price dipped to $68,420, wiping out $1.3 billion in open interest. This is a major development that has caught the attention of investors and analysts alike. If you want to understand what happened and what it means for the future of Bitcoin, stick around and let's get into it. So let's begin with a quick overview of the situation. On June 7th, Bitcoin's price experienced a sharp drop, hitting a low of $68,420. This sudden dip led to a liquidation of $1.3 billion in open interest. For those who might not be familiar, open interest refers to the total number of outstanding derivative contracts, such as futures and options, that have not been settled. When the price drops significantly, it can trigger a cascade of liquidations, amplifying the downward momentum. Now, you might be wondering, what caused this sudden dip? There are a few factors at play here. Firstly, the overall market sentiment has been bearish due to macroeconomic uncertainties. Inflation concerns, interest rate hikes, and a potential economic slowdown have made investors wary. Secondly, regulatory pressure continues to mount. Recently, the SEC has been cracking down on cryptocurrency exchanges, adding to the uncertainty. Lastly, market manipulation and high leverage can lead to sharp price movements as positions get liquidated rapidly. Let's talk more about the impact on open interest. When $1.3 billion in open interest gets wiped out, it indicates that a large number of leverage positions were forced to close. This can lead to a cascading effect where more and more positions are liquidated, pushing the price down further. The liquidation of these positions can also reduce the overall leverage in the market, potentially leading to a more stable environment in the longer term, but the short-term effects can be quite dramatic. So how has the market reacted to this event? Initially, there was a lot of panic selling, as evident by the sharp drop in price. However, we also saw some buying interest at those lower levels, indicating some investors view this dip as a buying opportunity. Analysts are divided on what happens next, though. Some believe that Bitcoin might consolidate around $70,000 before making its next move, while others warn of further downside risk if economic or macroeconomic conditions do worsen. To put things into perspective, let's look at some historical context. Bitcoin has experienced significant dips before, and it has always managed to recover and reach new highs. For instance, in May 2021, Bitcoin dropped from around $60,000 to $30,000 in a matter of weeks, but it eventually recovered. Comparing the current situation to past events, it's clear that volatility is part and parcel of Bitcoin's journey. While past performance is not indicative of future results, it can provide some reassurance to long-term holders. Looking ahead, what can we expect next? Well, the future of Bitcoin remains uncertain, but there are a few key factors to watch. Regulatory developments, macroeconomic trends, and technological advancements within the Bitcoin network will all play a role. Some analysts are optimistic, predicting that Bitcoin could rebound and even reach new highs by the end of the year. Others advise caution, suggesting that we might see more volatility in the near term. As always, it's crucial to do your own research and consider your risk tolerance. Let's jump down into the charts and take a look at what's going on from the technical analysis aspect. Okay guys, so here we have Bitcoin paired up with USDT. We're on the one-day Binance chart. And as we can see, and following on from our previous TA, we are still looking for more volatility to the downside. Now, things can change quite rapidly in this space, so I want to kind of share a couple of thoughts that I've been having recently after this recent volatility. Okay, we did see a push higher where we did actually rally up to $71,997 before we saw this drop in the market. This is actually a new daily high based on some of the most recent candles that we had seen. For example, we had a high over here at $70,687 on the 27th of May. We went up into a new higher high here on the 4th of June, again on the 5th of June. Again, we saw some interesting volatility, a little bit short actually on the 6th, but up into that new higher high on the 7th of June, just before we saw this drop in the market. Okay, now we haven't broken the previous swing highs at 73,777. So we do have to look at this, unfortunately, through the lens that we might see more volatility in the kind of shorter term. Now, the good news is that the current pattern that I had mapped out here, this W, X, and Y, is now not valid. And this is because we rallied up higher than the previous swing high on the 21st of May. This was at 71,979, right? So we went up just by a few dollars, but it was enough to break out of that structure that we were tracking. This is a positive sign. It means that we are not tracking this move down towards the 64 to 66,000 that we were previously talking about. So the bulls kind of did break us out of that bearish situation. There's only one scenario where it's possible that we have that move to the downside, and that's something that is called an irregular flat correction, which would basically be a kind of 5-wave move like this, where we'd have to come down deeper, but well, a 3-3-5 move, which would basically have to be something to this effect. I don't think that is the case. So this move to the downside right now is actually giving us a lot of positive vibes. It does look like we're going to have a little rebound, maybe a little bit of a move to the downside to complete out its structure, but nothing too major, and potentially find support on the 50 exponential moving average and the 50 simple moving averages, right? The blue line being the 50 EMA sat at $66,854, and the SMA sat at $65,805. So although we did break out of the pattern where we were tracking moves to the downside, the most recent volatility still makes us look like we're looking for support at these lower ranges. We do, of course, have positive vibes being found here with the higher low situation that is going on. Take a look at the stochastic RSIs, and we also back up that bullish vibes that we are seeing here for BTC with how fast our stochastic RSI has corrected on the daily time frame. We're not yet in the oversold area, but progress has been made here, and it is looking pretty decent. We can see that we're going to come down quite nicely into this oversold area, and where momentum has the potential to shift back into upward momentum. So I still expect a little bit more volatility. We'll be looking at potentially coming down just a fraction further, finding support on the 50 EMA on the daily time frame, and then looking for that next surge to the upside, where I potentially do suspect a new all-time high for BTC. Our divergence indicator shows no divergences against the RSI and price action. So, there's no bearish or bullish divergences being seen here. The relative strength index is above the 50 level, indicating we still are in an upward trend. This is also something that we can see and note when we take a look at smart money concepts. We remain in a bullish pattern here on smart money concepts on the daily time frame, so none of that is terribly too much concern. Everything's actually looking pretty good for Bitcoin here, right? We still are targeting out some of these slightly higher ranges, 78 to 86, or more specifically 82 to 87. These are the next kind of bigger move targets to the upside, after which we'll probably see another calling off and another run to the upside afterwards, in my humble opinion. But you guys have been watching these videos for a while, as long as you're OGs, and if you're new, subscribe and stay up to date with everything that we do here. But ultimately, we've been kind of tracking the idea that Bitcoin's journey in this bullish market is only really just beginning, and along with the altcoins as well, we haven't really seen a significant amount of new demand in the crypto market. If you strip out everything that's happened with the ETFs, you can see that the actual Web3 demand aspect of things isn't really where it needs to be for a bullish market. We've been through this many times, and I do think we're getting closer and closer to that that point where we start to see Bitcoin reach these new highs, new adoption for Web3 will start coming in. More speculative investment, I think, will also come in for the altcoins, which have been lagging behind quite a bit. We can obviously blame many different avenues for that, but I think for the most part, we just haven't really seen fresh demand, fresh investors really coming into the crypto space just yet. The stock market play is very interesting with the ETFs, and I do expect that to continue to run incredibly well, specifically when we start seeing the Ethereum spot ETFs and the Bitcoin spot ETFs start to also get traction in the coming months. Now, obviously, this has been a daily time frame and on a weekly time frames. These are charts that are going to take weeks to months to play out. I'm not expecting instantaneous results. We do expect volatility. We will see movements on smaller time frames going up before we go down. And something that I see in the comments a lot on these videos is that people lack the understanding of basically time frames within the TA. They kind of expect instantaneous results when they watch a video, and that is not the case. Ultimately, the videos that I'm putting together here on these daily and weekly time frames, they are technical analysis charts that are going to play out over months, not days, and do expect extreme volatility on the build up towards these larger macro swings in the market. Now, you can let me know your thoughts and opinions in the comments down below. Do you agree? Do you disagree? What is your long-term price prediction for BTC, and have you been buying the dip? Let me know in the comments below. And if you have found today's video useful, smash that like button. I do appreciate that. If you are new, subscribe, and I'll catch you all in the next one. And why not check this video out to stay up to date with more.